Hey everyone, DoorDash stock is down 62% off its highs reached in late 2021, and a lot of investors are asking if DoorDash stock is a buy on the dip. So that's what I'll do in this video is answer that question if DoorDash stock is a buy on the dip, looking at the company's financial statements, its progress in its growth opportunities, and weigh them against its valuation and its prospects for the next 2 years and for the long term, and come up with the answer if I think DoorDash stock is a buy on the dip. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, before we get into the financial analysis, I wanted to thank channel member Cullen the Hound who requested this video on DoorDash. Now, I give priority to channel members when they make requests for certain video analysis on stocks, and Cullen the Hound is a member, and the way I can tell if you're a member is I can see this blue star here that tells me that you have paid the $4.99 fee and became a channel member, a channel supporter, which I truly appreciate. If you want priority given to your requests for video analysis, please subscribe and add as a channel member. It's only $4.99 a month, and it helps me make more videos just like this one, and you get priority access to video analysis. So let's jump into the analysis now. All right, so DoorDash has been one of the more surprising companies coming out of the pandemic for me. I thought when economies reopened and restaurants reopened that DoorDash would experience a meaningful dip in its customer orders, in its marketplace gross order value. I thought people would not want to pay all of these fees to have DoorDash deliver these items to their homes. I have been surprised. I have been surprised at people's willingness to pay these fees for the convenience. And if anything, I learned that people are willing to pay for convenience. This has been true not just for DoorDash, but across the board with any of these companies that offer convenience to people. They've continued to experience robust demand from consumers. So I've been surprised here. So let me show you. September 30th, 2022, marketplace GOV for DoorDash at 13.534 billion. And that's continued to grow over the last several quarters at rates of 30%, 29, 29, 26, and 24%. So the company has experienced robust growth in gross order value. Now, that's not the company's revenue. That's just the size of the total order. DoorDash has to share that with the restaurant and with the driver. DoorDash's revenue came in at 1.7 billion and has grown to 2.164 billion. It's generated revenue growth of 33%, 40%, 40, 33, and 27%. Now, part of the reason it's been able to grow revenue faster than marketplace GOV is because it's expanding its take rate, the percentage it takes from each transaction. It's keeping more for itself and giving less to drivers and restaurants. The net revenue margin, which measures that, has increased from 12.6% up to 12.9%. And I think there's plenty of room for DoorDash to increase this even more, closer to 20%, because that's what some rivals are charging. Let me show you Uber's revenue margin take rate. So here I have highlighted Uber's revenue margin take rate. And remember, Uber has two segments, not just food delivery, but it also has the mobility, which has much higher take rates. Look at its delivery segment. For delivery, Uber's take rate is 18.2% in the 3 months ended September 30th, down from 20.2%, but still above the 12.9% at DoorDash. So room for DoorDash to increase its take rate further. Uber's more mature mobility segment at 28.3%. So that's the potential that DoorDash can get to with its food delivery segment as well, increasing the take rate from each of these transactions. And so that's double the growth for DoorDash, not only growing the total value of transactions, but also growing the percentage it takes from each transaction as a double area growth for DoorDash. DoorDash has also answered one of my other concerns, and that's been shareholder dilution. DoorDash announced a share buyback. It authorized $750 million in buybacks of their Class A common stock, and you can see that's pretty much eliminated the shareholder dilution. Let me show you that here. Basic shares and RSUs outstanding: 446 million, 452, 444, 449, 450. These are in the millions. So, roughly the same. You haven't seen very much shareholder dilution. A couple of years ago, this was a big problem. DoorDash was diluting shareholders significantly. DoorDash also has an excellent balance sheet as of September 30th, 2023. It has about $3.8 billion in cash and short-term investments. That goes with zero debt. So it's in a very pristine position with its balance sheet. Another thing that has improved with DoorDash is a control on its sales and marketing expense. In the 9 months ended September 30th, sales and marketing only increased slightly from $1.253 billion to $1.416 billion. Even though revenue increased by $1.6 billion, sales and marketing increased by roughly 10% of that. That's a disciplined approach to increasing sales and marketing. And just anecdotally, I haven't seen promotions from DoorDash in 2023 as much as I did in 2022 and 2021. They used to frequently send me these offers of like $25 off your order of $30 or more. And I would only order DoorDash when I would get those kinds of offers. I haven't seen very many of those offers lately, and so I haven't used DoorDash, but I'm not DoorDash's target customer. Nevertheless, they've been more disciplined with that sales and marketing approach, and I think that's a prudent strategy. You don't want to go after customers like me that are not going to be profitable, that are only going to use your service when you offer them a promotion. You don't want customers like me. You want customers that are going to order your service more often. Sure, once in a while you send out a promotion to get someone to try it, but once you've done it several times and you see they only order when you give them a promotion, that's a signal to stop sending promotions, which I'm glad they stopped sending me in terms of, their business, right? That wasn't a very profitable decision for them. But now they've been more prudent, and you can see that in their financial statement, controlling sales and marketing expense, and that's led to a nice improvement in their loss from operations. In the last 3 months, the loss from operations improved from 308 million to 108 million, a significant improvement in profitability. I don't mind these growth companies losing money, but I like to see progress, and DoorDash is definitely demonstrating progress on the bottom line. And the thing I find most impressive with DoorDash is the growth in cash flow from operations. You could see net cash from operations in the 9 months ended September 30th in 2022 was 344 million, and that increased to 1.11188 billion, a significant increase year over year in its cash flow from operations. DoorDash has been able to put everything together and really develop this business model. Now, over the next 2 years, DoorDash is expected to grow revenue by 17.6% in 2024 and 16.3% in 2025. That will be slower growth rates than DoorDash has experienced in the past, but it's growth in the double digits nevertheless, when I was suspecting that they would experience a decrease in orders and decrease in revenue, given that they've been offering these services when restaurants were closed, and they're still generating more revenue now than they were during the pandemic when restaurants were closed. I find that to be fascinating and surprising, and it goes to show how good they've been at serving those customers that have been using DoorDash. They've found good value in their service, and DoorDash has been able to offer that service and generate strong cash flow from operation. Finally, I wanted to look at the valuation. DoorDash is trading at a price to free cash flow of 41.7. And given everything that I've looked at here, weighing it against its valuation, I would say DoorDash is right on the borderline for me. So to answer the question, should investors buy DoorDash stock on the dip? You could, or you could wait for a little bit more of a pullback, a 10% pullback, I'd be more comfortable paying a price to free cash flow of around 36 for DoorDash. 35, 36 would be my desired price to free cash flow to pay for DoorDash. But paying a price to free cash flow of 41.7, it's not too expensive. It's not too rich. It's a fair price, I would say. And investors have done well buying good businesses at fair prices in the long run. But given its risk profile, I would prefer to wait for a moderate pullback to buy DoorDash stock at a price to free cash flow in the mid 30s. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.